Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
Okay, so the CME FedWatch tool says there's an 88.8% chance of a 25 basis point ease next week at the Fed meeting. Are they backed into the corner? Do they have to do it because
So you're
of that?
telling me there's a chance, Jim? Listen, the Fed has been backed into a corner all year. It's just, I think they're now realizing it. What I think is interesting, though, that maybe letting them out of that corner, the interest rate curve is starting to behave more normally, Jim, both in trading volume, both in kind of some of the inflection points. So that, to me, is maybe trying to give the Fed out of that corner.
Is the interest rate curve steepening out a tiny bit because they believe the Fed is the appropriate amount of dovishness, or even more than the appropriate amount of dovishness?
It could be the appropriate amount. It could be the fact,
But
Jim,
not less.
But not less, that's
Yeah.
right. And also it could be the fact, too, that stocks have started to behave a little bit more normally. Some of the other trade tensions have cooled off a little bit. That could be propelling rates a little bit more normally to the high side.
I like that. Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. Scott.
So, yeah, Jim, we talked about rates in the ZN, especially today, behaving more normally, the curve looking more like it should in a period of time when we're seeing still some economic growth. I think that's overdone. I think the market has overshot to some degree, kind of that normalization, if you will, because if you note, my friend, this month, it's not just the Fed. There's other central banks out there that are meeting, and they're all dovish,
They're
my
all
friend.
easy, yeah.
So I believe there's an opportunity here to look at the market in the ZN and say maybe protect yourself from some risk there. So specifically, Jim, today I'm looking at buying the week 4, 129.5, 130 even ZN call spread for 18 ticks. This trade risks $281 to make potential $219, if I could say it. It expires on September 27th, so you get through a lot of those central bank meetings. The underlying, interestingly, is 129.28, my friend. So it's already in the money and about an even shot to express yourself somewhat bearishly, or bullishly rather, if rates do and eventually kind of turn down again.
I like this trade to express yourself for prices going higher,
Correct.
rates going lower. It's somewhat unorthodox. You don't see people do these a lot. It has 10 ticks intrinsic already, but you're capping your downside to increase your odds of having a profitable trade. I'm not.
The odds of which aren't too bad either.
Yeah, they're not too bad at all. I'm looking at it differently because I actually think now that the stocks look fairly buoyant to me, we believe we have an easy Fed, I think the curve could steepen out a little bit. So as an example, I'm buying the week 4 SEP, the same expiration as yours, the 128.5, 128, 127 and 3/4 put fly for 3 ticks. So it's buying a half point wide put spread and then selling a quarter point wide put spread just below it. So it risks 3 ticks, so $47 to make a potential $453 if it settles right at 128. But the thing I like about these broken put flies is that even if it goes lower, you still will make the 25 tick difference of the top put spread to the bottom spread after only laying out your 3 ticks.
Yeah, nothing broke about it. And I like kind of this style. I mean, come fly with me, Jim, as you usually do, with respect to paying for it in a way like you did there. Mm-hmm. And the fact, I just believe that kind of being a little bit more bullish on ZN is the expression I want to have on, but I like your expression as well. It's just a different way to look at it.
Okay, so anything that could flip the Fed to be hawkish quickly?
Maybe a China trade deal, which is out of probably the cards right now, but at least something that is more bullish that we start to see kind of steepen the curve as it is.
Not a bad thought. Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.